Hey traders, welcome to our midday recap. This is Michael from Game Edge coming to you. Just going to cover kind of what I'm seeing heading into the afternoon here. We'll cover kind of some of our pre-market prep that we went over. We could show the SPX game plan if you want. Hey Despian, how are you? You can go back and review our pre-market prep video and kind of check out what I was thinking and whether it's matching our price action today. My main takeaway this morning was looking at our SPXP 0DT via our web app. Drunken Sailor range was fairly wide, transition was fairly wide. This obviously is congestion areas. We talk about when our transition widens as well as our Drunken Sailor, we talk about uncertainty, but it's not necessarily uncertainty. It just means that market participants, how they position where their strikes are at can lead to a lot of choppy price action, which you can see within the overall Drunken Sailor range, right? It's just kind of a hodgepodge of positive, green net OI, red net OI. If we get back down into this other, into this Drunken Sailor range, we were keying in on 65, 90, 95, and 6600. Obviously, a lot of our members were having discussions about where the Drunken Sailor range was this morning. We finally put it at 65.90, which was that strike up there. I just didn't pull the box up this morning. But 6,600 was going to be that key level to get over, right? Significant amount of OI there, 7,000 contracts. So what we were going to have to see, hey Tony, hey Patazi, Will, how are you? What we were going to have to see with our intraday volume metrics was contracts, volume of those contracts transacting higher than what that net OI was on slice over slice, or 5 minutes or 2 minutes or 3 minutes, whatever time frame you're looking at. So you're going to need to see a significant amount of out of the money call speculation above 6,600 for price to move higher than that level. And as I said this morning, I thought it was going to be difficult to get above 6,600, have a sustained move to the upside. Now, if we did see that volume come in and get across 6,600, we drive all those out of the money calls in the money, and we could have had, a quick move, up toward a quarter level, or, 10, 15, 25. But for a Friday, it was probably going to be difficult to mount that 6,600 and drive to the upside. So then what do? We go look at our market trend model. Quickly, I'll flip over to our market trend model. And you can see that it's traversing to the downside. So quick orientation market trend model is based on the tick index. The bolded white CT is our intraday instantaneous CT. That tells us basically buying versus selling, what's happening in market participants. You can see it's just trending to the downside. Again, not significant sell-off. It's just, meandering to the downside. So this is obviously indicating that there's some selling occurring. You look at new highs versus new lows, fairly flat, right? So there's just no involvement today. So then we go to, well, how do we understand where direction is at? Well, that leads us to what our vol-in tool is designed for. That tells us where market participants are transacting and the volume of those strikes that are transacting. But back to the tick, it's basically just traversing to the downside. After that large move up yesterday, we did drop below the moving averages. So if you were thinking long, then this would turn you into a consolidation or a slight pullback mindset, right? So then directionality wise, you may not be wanting to play for a significant move to the upside across that 6,600 if that was your thesis or game plan in the morning. So that's how this relates to that. Look at the plus 1,000, minus 1,000 filtered tick, right? Institutions are not really involved today. I can expand this. They're below zero, but it's just slightly drifting to the downside. So yes, there's a little bit of selling, but there's no urgency from institutions, right? It's a Friday. And then the same way with the cumulative tick. So this would tell you, hey, probably should be a little bit cautious for a slight consolidation or pullback, which we talked about this morning. GEX ratio was slightly elevated. Right-hand plane out of the money speculation on our delta balance was not showing significant upside at the moment. It's just kind of sideways. So thesis was most likely we'd just chop around the top of the Drunken Sailor range or drop into the Drunken Sailor range, chop around there. Moving across 6,600 was maybe not in the cards, and go to our quality tick here. This obviously is less sensitive than the tick US that we just talked about, and we're just within those railroad track momentum moving averages. So just a slight pullback within the overall structure. So then what do we go to? Well, then we go to our vol-m command, which I spoke about and posted. So what is it telling us? This chopstick cross pattern, get it orientated here, green bolded line is the call centroid. This is the mass. If you take the center of the mass of market participants of volume that's transacting, you obviously have right and left, but this is the center. This tells us where the mass of market participants are transacting. And you can just draw a line here across 6,600, and we're just kind of oscillating right back and forth around 6,600, and we're actually below it, right? So we would need to see this line turn up. We'd need to see the mass of market participants transacting above that 6,600 level. That would tell us that out of the money call speculation is happening above 6,600, and we'd have an opportunity to move to the upside. Right now, we're not seeing that. So then what do we look at? Well, we look at the linear fit lines. If we continue on this trajectory, where will we close, right? Well, it says 65.83. I'm not anticipating that's where we might close. This most likely, we never ever get these chopsticks completely crossed towards the end of the day. So these will continue to open up and separate. And then we look at the put centroid. Where is the mass of market participants transacting puts, right? Just draw a line across here. 65.60, right? Basically above 65.60. So this interactive chart, 65.66, 65.65. So unless we see this centroid completely start dropping to the downside, making lower lows and getting a negative slope, we're not really seeing the out of the money put speculation. So what probably is going to occur for the rest of the day? These are your goalposts, 65.60 to downside, 65.80 to the upside. And you're going to be stuck between those two levels for the rest of the day unless we see some change. We have another chart that shows rate of change and slope. And if that starts picking up to the downside or to the upside, then we can view that on a slice over slice basis. So then we would change our thought process of where price action might go. But right now, if we continue on this trajectory, I'm going to say we're probably going to close somewhere around in between this 65.80 and 6,600. So let's just say 85, just throwing out a number there. But we'll see these linear fit lines, they'll separate, they'll give us a point, and that's probably where we're going to most likely close. Again, if we continue on this trajectory, volume continues to drop off for the day. So we'll probably just meander around this unless some event comes in. So that's how we that's how we go from our morning game plan to what we're seeing intraday, and then transitioning that to how you can play this for the rest of the day. So you could have played some option structure if you wanted to. Obviously, directionality was not the play when we see these chopstick type patterns. We really have no direction, and there's low volume, and these centroids are basically flat. I mean, yes, they are slightly negative, but they're basically flat. The rate of change is flat, so nothing is occurring. Market participants are really not pushing the market in either direction. So you're just at the mercy of the opening and closing of mechanically of contracts of market participants, and that volume just continues to drop off throughout the day. So I can pull up our latest run here via our SPX volume command, and you can see I'll pull up the volume. We'll look at that first because I talk about volume dropping off. So here we go. So we see the number of contracts transacting. It's basically matched, right? So 300. 370 versus 370, 367 calls versus puts. So basically those are matched, right? And you see this across the board. You did see a little bit of winning on the call transaction here, 469 to 423, right? And what happened? That drove us up slightly. So this is what I want to look at, right? Who's winning the battle of the calls versus puts? So we did have some puts transacting here that were outpacing the calls. So obviously you had slight dip to the downside, nothing significant, nothing really changed in the tick. So really no urgency to the downside. So if you want to see a large, massive move, urgency to the downside, you would want to see the puts transacting up in the 700,000 lot volume, and you'd want to see the calls basically continue to drop and not transacting. Vice versa, if you want to see this move to the upside, you'd need to see the calls transacting 500, 600, 700 contracts, and the puts really not transacting that much at all. And the calls would continue to win the battle. And then most likely that would continue to drive us to the upside. But right now they are balanced and matched. Nobody's really winning the game. So we'll just continue sideways until that changes. So then our latest vol M run here. Hopefully that helps everybody. If anybody has any questions, let me know. Latest vol M run, you see this continues on the trajectory, and we're just continuing to chop sideways. So I think that's probably where we would end the overall day, somewhere around in there, again, unless we see a significant change. So I see we have 40, 50, 60 people, 70 people maybe joining us. So if anybody has any questions about the tools, how we use them here at Game Edge, and we go from the pre-market prep to the intraday execution. I'd be happy to discuss that. One stock I want to go over is Tesla. That was on our mechanical portfolio, P-Trans to PGX this morning, that we were entering, and we entered it in mechanical portfolio. So I'll pull that up for everybody, and I can show you our trading plan for the day. So here's our Discord. This is our mechanical portfolio for the day. Here's what I posted last night. This is myself. I run the portfolio here for GameEdge. Obviously, everybody's portfolio looks different depending on when they started the overall P2P trading process or trading plan. But here we opened trades in Tesla this morning. Obviously posted 638 last night that we're going to open market on open. And then obviously that just executed. I put the order in, I walk away and let it go. So our portfolio is here. And then we entered Tesla on the 4th to 336, and we're up 9.7%. And then we had another position open this morning, so we'll be up pretty significantly on that. So here's our mechanical portfolio. Just wanted to point that out to everybody, and we'll see how we close. Unless plus GEX moves up, we actually may have a close on Monday, which would be great. That'd be a one-day trade for us. The average is usually 2 to 3% in the P2P portfolio, but we definitely might outpace that, which would be a great addition to the P&L for the portfolio. So that's how we use our P-Trans to PGEX scanners. Obviously, I talked about a lot of these stocks this morning needing to cross above P-Trans. You see AMD crossing above P-Trans, nice move to the upside. Apple crossing above P-Trans. Here at 230 plus GEX was there, and now we're starting to stall at COTMC. So historically, that's where out of the money calls go in the money, and you see some monetization. So across the board, you can just see a lot of these stocks held very well, held the consistent key gamma delta levels, and are moving to the upside. PLTR 165, we talked about 170 this morning, was probably important. So you can just go across the board, and then you can run our P-Trans to PGEX scan in the morning. You can run it intraday, and if you're a swing trader or an intraday trader, that helps you narrow your focus list very quickly to be able to hone in on those stocks that are transitioning or moving above a positive gamma call dominated environment and structure, and usually that leads to price appreciation just because you're entering that environment of positive gamma call speculation. And as those out of the money calls get driven in the money, our book gets longer, positive delta, the dealer book gets shorter, and they have to buy to hedge, and then just continues to drive price. And then I think as we've seen with Tesla today, you probably would look and see, you've probably seen a significant amount of calls continuing to open, market speculation. So that just continues to drive price higher. So that's how we do that. So DJ, check us out on gameedge.us. Their pricing is there. Click on it. 14-day free trial. No attachments. Come in, check out our tools, check out our community. And again, it's all about, for us, it's about the education in the beginning, getting people up to speed very quickly with the education. That's why we have our Gamma Edge Fast Pass. And that is our flagship course to get you up to speed. Here, free courses. And you can sign up for the Gamma Edge Fast Pass, and you can actually look through it before you even come try us in Discord, right? And get all the education before you come and get into the ecosystem that is Gamma Edge. So yeah, so the live trading alerts. So we don't necessarily produce live trading alerts. What we want to do is we want to educate traders on how to execute our systems, right? Which is P-Trans to PGEX. We have a wheel strategy. We also have a 0DTE strategy based on credit spreads. So we give you all the tools to do that. We educate you on how to execute that. And then we come alongside you in the Discord. All of our team, our traders, we're in the trenches, we're trading. We have a swing trading place also that one of our members runs, or sorry, that one of our team members also runs. So we want to help you learn how to trade, right? I mean, because I can give you alerts, everybody can give you alerts, but if you have no idea why you're in the trade, or you have no idea what your risk management is, or how to get out of the trade, then that's not going to do you any good. That will be the quickest way to blow up your account, right? And then what happens, not that we're going away anywhere, but what happens if you enter a trade and our team, our schedule doesn't allow us to get back to you for that day, right? But you have the tools. You have the tools to execute. You have the tools to understand what's going on. Then you can execute on your own, right? I mean, we've never ever been the service that's going to give you live alerts. Now, I show you what my ptrans to PeakX portfolio does, and you can follow those because you can run the scan, you can enter those. You see we have a 70% win rate. You can follow those mechanically, right? And there's really nothing to it, right? When it gives you the exit trade at after hours, then you exit the next day. That's the very simplicity, and that's for working people. And it beats SPX and SPY buy and hold by a significant margin. So I think that's basically what I want to get at. So yeah, so just be honest with everybody. If you're looking for live trading alerts, that's not what Gamma Edge is. Gamma Edge is help you to understand the SPX option structure, why the price moves where it does, how to navigate the structure when it changes, and how to be on the right side of the market, right? And if you can do those 3 things or 4 things or 5 things, you should be able to be a successful and profitable trader. It doesn't really matter what instrument you're trading, right? And that's being on the right side of the market and understanding what sentiment and structure is, then you should be able to be profitable. Just this through execution, as long as you manage your risk, right? We are a very we're not a Reddit type Discord. We're not a YOLO. You will never see anybody post in our room that they're YOLOing puts or calls, or that they're doing a EPS trade just because they think Tesla's going to go up. That's not what we're about. We've never been about, and that's just basically you're making uninformed trading decisions. We're about making educated trading decisions with data. We're data driven. That's what we've always been from the beginning, and that's what we'll continue to be. And I encourage everybody, if you're listening to this, even if you don't come join Game Edge, your trading plan, your trading journey should be data driven somehow, some way, right? And this is no shade on technical analysis. This is no shade on fundamental analysis, not at all, 100%. Because I think our tools and our option structure overlays with many existing trading plans, right? And you'll notice that the option structure overlays sometimes with supply and demand and where TA analysis is, right? But you should have some sort of data that is reliable that you can go back to, right? Because if you go on a string of losses, what are you going to go to? You're just going to throw your trading plan out the window because you hit a string of losses? No, absolutely not, right? That's why we talk about our P-Trans to PeakX portfolio. 30% of our trades that we enter are going to be losers, and some are going to be large losers. We have no idea in the distribution of the bell curve of a positive expected outcome trading plan which ones of those stocks will be. If we did, then we wouldn't take those trades, right? But we have no idea. It's just the same thing with anybody's trading of SPX, SPY, Qs, IWM. If you have a positive outcome expectancy trading plan, you have no idea which ones of your trades are going to be losers and which ones are going to be positive. But if you continually execute the plan the same way with consistency and you have a positive expectancy, you're going to be a positive P&L trader, right? So we have a 70% win rate on the P2P. We take these entries without emotion, without thought, anything. Once it comes up, we know what our data is. We know it produces a positive outcome. We enter the trade with a certain position size, right? And whether that is one of the losers of the next 30 trades, then it is what it is, right? But when you start looking at each individual trade and hanging your life on each individual trade that might be a winner or a loser, then you've completely lost and you've completely changed the trajectory of your trading plan, right? And you're messing with your expectancy, right? So I hope that helps. I hope that explains, why we're not a live trading alert service. We do have some things in the works that may move in that direction, but we want people to understand how to use the tools and what the tools are telling you, so you can make an informed decision about your own trading, right? And not rely on a YouTube or guru or Reddit guru saying I'm entering the trade, and then you're waiting for them to exit the trade so you can exit, right? You have no idea why you're in the trade. You have no idea what's going to happen. I mean, you're basically you're relying on a person, or even a service. I mean, I would push you guys and gals that if you're signing up for a service just for alerts, you don't have the same risk tolerance as the people that are trading in that alert system, right? You don't. And so I would ask, what's your position size? What's your percent of your overall portfolio that you're risking, right? And none of that stuff ever gets talked about in live trading alert services. It's just, I'm entering Tesla, I'm entering Apple, right? You have no idea about risk management. You have no idea about the structure of the trade. So I would encourage everybody that push your live trading alert people, right? If you're in those, right, and ask questions and understand, right? And if they don't give you education about why they're doing stuff or how they're doing stuff, and they're not transparent, then I would encourage you to run away from those, because you have no idea what they're doing, or an understanding of how they're executing, or even if they have a positive expectancy, right? I would push all of you to understand if they actually have a positive expectancy, right? I mean, like, do you even know if they're a positive trader, or are they just willy-nilly entering trades and only showing their winners and not their losers, right? So yeah, Despina, Tesla, 400. I have no idea. I will tell you what the option structure shows, and the trajectory of price is really up to the navigations of the option structure, and we can go over that. So let me pull this up here. So let's look at Tesla. Yeah, I don't want to tell you it's going to 400 because I have no idea, right? Nobody has any idea. And if anybody tells you that they know if Tesla's going to 400, they're crazy, right? Because there's so many things can happen. So call dominated structure, right? That's supportive of higher prices. That means out of the money speculation, okay? PGX is at 400, okay? So the structure is there for it to move to 400. Significant amount of OI there at 400. COI 960, so that's off the chart. That's just because of how the algo's putting that. So 400 is a likely possibility. Let's see what the expiry is. Okay, so 400 PGX for today. Expiry could be a possibility. Looks like 395 is going to be a pretty big hurdle to get over. I would anticipate us to probably stall around here. Next week, okay, so we see PGX and COI at 400. Okay, so can it make it to 400? Yes. Do I anticipate it to go up to 400 or into monthly OPEX above 400? I'm going to say probably not likely, right? Unless this structure continues to advance. Let's look and see what like after OPEX. So after OPEX, we see the COI move up to 450, but we see PGX stay at 400. So what I would like to see is that structure continue to advance higher. That was indicative of out of the money call speculation, market participants speculating at higher prices, and that would be 450. All right, so that's how you click through our web app. And then you see, actually after the end of the month, you see PGX and COI drop to 360, right? So that tells you after the end of the month and after OPEX, the structure actually drops, right? So that's not indicative of Tesla continuing to price appreciate, right? And then we go back to 400 after the end of the month, 400. So so the theme here is you don't really see the structure continue to advance, right? Now, what I would like to see is after OPEX or after the end of the month, I would like to see this PGX and COI start moving up to 450. And that doesn't mean it can't happen. It absolutely can happen. It's just I'm giving you a point in time. So I would anticipate 400 to be a cap on price. Yep. Okay. Okay. So Vishal Patel, when you enter a trade based on your P2 GEX, when do you close if it's not going your way? We do not close until we get a close above the PGEX level. So two things will happen. PGEX will continue to advance and price will continue to advance. And then we'll get a close above PGEX, which will be price appreciation. Or the spot price will come down and PGEX will come down, which means the overall speculation is dropping. And then you'll get a price close above PGEX eventually. The PGEX will come down and then you will get a close above PGEX eventually. That will happen. Yep. So that's how we exit the trade. It's mechanical. There's no emotion. There's no speculation. It doesn't matter about earnings. Our partner Edge Raider is where we ran all of our 13-year back test, and then now we're doing 3-year forward testing. It is basically in a closed vacuum chamber that we ran this back test. Did not take into account earnings, did not take into account anything. It was just mechanically looking at the option structure and the speculation, and that's what we're taking advantage of with our data, is understanding speculation and the option structure. And as you know, options, tail wags the dog, that options drive price. And where market speculation is where price will go. If there's no market speculation there to the upside or downside, price is not going to go in those directions. And it's very mechanical. So it takes all the emotion out. This is perfect for people that have 9-to-5 jobs and don't want to look intraday and just beat the SPY SPX and just continue to beat it every year and just mechanically trade. So yeah. So hopefully that answers your question. All right, so yeah, absolutely. Happy to answer. Yeah, so we're continuing to chop sideways as I discussed. That's what the tools are showing us. We continue to have a good pulse of what the market is doing. I think you can go back, and if you're just joining us and don't know anything about Game Edge, go back and review all of our pre-market prep videos, our midday review videos, and our post-market review. Go back and review all those. And then if you have any questions, come join us or respond on YouTube, respond on X. We are extremely transparent in how we do things, how we execute, how we look at the SPX option structure. We have nothing that we're hiding, at all with how we consistently navigate the SPX option structure. Now, we're not always going to get it right. Nobody's ever going to get it right, but I feel like we get it right a significant portion of the time, right? And we understand where the goalposts are. We understand where price action is most likely going to go or not go, depending on if we want to do spreads above or below. We are able to understand if the speculation to the upside is starting to degrade, and you see out of the money put hedging coming in. We start to see our tools turn, and then we start to get cautionary, right? And that's sentiment, structure, and trend. And we do those 3 pillars every single day, and we really don't change our game plan at all of how we navigate those the SPX option structure, or how we navigate really how we look at the SPX option structure. So, anybody has any questions? Let me know. I'll hang around for a couple more minutes. Appreciate it. If we do get above this kind of 65.95, I think we could test up towards 6,600. Not really thinking that we drive much higher than that. It's already 1:43 in the afternoon, obviously, and we're going to be heading into the close, and it's a Friday, so I would assume most traders have already kind of thrown in the towel and probably headed to wherever they're going this weekend. So yeah, here's our latest vol-am command. Let me throw this up. So again, you can see these are actually spreading apart. So let's go here. Let's go. Oh, I don't have the previous one. So these are continuing to spread apart, right? So this was at 6,600. This was at 65.83. So we're continuing to spread those apart, and then we'll get a final endpoint pretty soon. But I'm going to assume it's obviously going to be in between 65.80 and 6,600. So let's make it, the midpoint there is 90, right? So that may be where we close at and where we're at right now. We're at 65.90, so we're just kind of heading sideways. Now, towards the end of the day, you'll probably get, a few spastic moves back and forth. But I would assume we'll just continue on this trajectory and finish the day somewhere around 90. So we'll see. So, all right. Anybody else need anything? All right. Thank you, everybody, for joining us. Everybody have a great weekend. Again, like and subscribe on X and YouTube. Again, you'll get notified when we go live. We appreciate it. Share our content. That's how we get to expand expand the universe of people that come join us. And we appreciate the interaction on YouTube with the chat and comments on X. We appreciate it all. So, all right, everybody have a great weekend. Yep, back next week.